Good morning. We are seeing the euro bouncing today following Friday's sharp declines. What's next for the EURUSD and the US dollar? This is the weekly market update, and my name is 𝗿𝗲𝘁𝗶𝗹. Alright guys, let's take a look at the euro. So the euro traded a bit lower than I was hoping for, or I was expecting. I was preferred if it would have just slid a little bit and not really traded as low as it did. So my general view, which I shared with you guys last week, was that as long as you traded above this level here, which was pretty much 117.81, we should be continuing to trade upwards. So we went up, then we went down, and then we went upwards a bit, but then the whole thing just sort of tumbled and traded below that trend founding level. Now this is the problem with trading at this time of the year. So it's 24th of August today, and it's probably going to be a bit choppy for the rest of this week, also the next week as well. Maybe from the 7th or so we can start to see some more interesting moves. What's also interesting in general is that people are starting to come to the realization that maybe the tide is turning in the case of the coronavirus crisis. Let me explain what that means. So this is the situation of COVID-19 cases in France. You can see that the 7-day average is up sharply, and roughly they're having about 4.3 thousand new cases per day. And you can see that the histogram here is almost at the same lows we saw here in March when we had these elevated levels. If you look here as well, if I show you the numbers for Spain, they've been going up rather sharply as well. And lately, though, they've been coming down, which is good. But what we're seeing here, which is quite interesting, is that we're seeing that second wave, potentially the second wave, in particular places like France. And it's not the number of cases and the number of deaths that matter. What matters here is that the government of France might say, all right, guys, this is getting out of hand. We need to lock down again, and that could obviously hurt the economy, because in Europe, they have been more stricter and stronger with locking down, and that could influence the economy. And that is something that could turn the tide a bit, because if you look here, this is the numbers from the United States of America. This is the first wave, and then it went down a little bit. Now in the US, they never really properly locked down, and in some states where they didn't have too many cases, they started to open up, and we saw that sharp rise in number of cases. And now people were said, all right, look, the US is not really handling this very well. They might be forced for a lockdown, or people would not just consume because they don't want to get this virus, so they're not going to go out. They need to save the money in case they need hospital care. And that was one of the drivers that lifted the EURUSD upwards. But now, as you can see, things are turning where this is coming down a bit, and then at the same time you have the numbers in euro coming up, and that is something that we should pay close attention to over the next couple of weeks and days, because that could be something that turns the trend around for something like the EURUSD. For now, though, the trend is bullish above 116.94, so there's absolutely no reason at all to make any changes to the outlook. And we just were a bit unfortunate if you're trying to buy that little dip there. Now, I'm not trading this one today, and I'm not sure I'm going to trade it, as I said, with the setup I also shared with you guys last week. But I will remain bullish because the trend is bullish. So if we do revisit something like 1774, I do think we could potentially just go upwards like that, and we'll probably remain range bound for longer, unfortunately. We did, trigger this as like a double top, very short-term one. So we might go higher, because we haven't reached that target yet. So ultimately, I think we can trade higher, but pay attention to those numbers and what's going to happen next and the resistance levels here. If anything, I would say we're stuck in a range. All right, this is pound versus the USD, where the idea has just been to buy on dips. And we talked about buying here a couple of days ago, well, a couple of weeks ago. The market went up to our advantage. The market then tumbled, and I continue to be bullish at these levels, and I still think we can go upwards again. There's no reason to change our view on the GBPUSD just yet. But zoom out a bit, it doesn't require too much thought here. You can see how this very important level, the green level at 133.59. So that level blocked the price on July 2018, blocked the price on March 2019, blocked the price to some extent on December of 2019, and we're now at that level and it's blocking price. And this is a big divider. If we trade above this level, we can go up to 140. If we trade below it, which we're doing right now, maybe we'll be somewhere in the midpoint of this big range. So maybe 126. That will make a lot of sense. So I'm happy to be bullish for now and continue to be bullish, but on a break to 129.99, then that's gonna probably take price lower. Now, if you're ultra bearish, you like to be a bit of a contrarian. I am not a contrarian, but if you want to be a contrarian, then maybe being bearish here, just below something like 134, which is this level we spiked to here on December 16, 2019. That might be something. Let's move along here. This is the dollar versus the Japanese yen, and the trend remains bearish for now below 107.07, which is this level here. I don't have a strong view. I don't think we should be pushing it, but it can go a bit lower. Aussie dollar versus the USD. It's also just at support. I've been, as you know, been bullish for quite some time. From well, I don't remember exactly, but I guess somewhere down here, because I'm a trend follower by nature, and I continue to be bullish. And we had some success. We said look for this to go up, and that did go up. And maybe we can do the same thing here again, which is just buy at support. Nasdaq, the New Zealand dollar versus the USD. I have been bullish here and here, and it didn't work out the first time. We just traded lower, and it worked out here, but then it came down tumbling. The New Zealand dollar is overall very weak, and while the Aussie dollar is bullish, GBPUSD is also bullish, and also the EURUSD is bullish. I want to lean on being bullish here. But all the different levels I've been looking at, the two different levels I've been looking at over the last couple of weeks have not been holding. So I would actually ignore this one for now. Gold prices. What's going on here? So gold prices are interesting. Well, kind of. We are stuck within 1848, which is this level here. And then we're limited by this downward moving trend line. And I think we need to converge for longer here. And I think it's probably going to take another week or two before people make a decision if they want to be buyers or sellers. Overall, if you're really bullish, then maybe something like 1904. This level here could be relevant and interesting. I'm not a big fan right now. I will let this trade sideways for longer and then possibly work with a breakout. Hey guys, it's crude oil prices, and the general idea has been buying on dips. So far, all good. I remain bullish about 41.05, win a bit of profit here on this idea. And there's no real change here. If we take out the high, we can go much higher, because this is like, if you just ignore this section here, then you have a bit of a range, which is like that. You can leave it like that, and maybe we're gonna go up towards this level here, but it's not really going anywhere. It's been stuck for ages here. I traded some of these moves and made a bit of money on some and lost a bit on the other one. Overall, a profitable last couple of weeks here. But right now it's super quiet here, so I wouldn't be too like sort of enthusiastic. But if we take out this level, we might go a bit higher if you didn't catch the dip. German DAX, oh look at that, on fire. I'm not really sure what's going on here, but obviously it's up with 2%. And congratulations, and give yourself a bit of an applause, pat yourself in the back, because we've been talking about buying here. We talked about buying here for quite a long time. We talked about buying the breakout here. That worked out fine. And then we said, look to buy here. And we reached this on August 14th already. That's 10 days ago. And then we went up, and then it went down and up and down and up and down. And then here on August 21st, it looked like we're probably not going to survive this. But we did. We never triggered that trend defining level, and we're now up sharply. Obviously, it's up with 2% right now, so you shouldn't be buying it. But we can easily tighten up the stop to 12,621. Don't really know exactly why we're up this much. You probably want to investigate that. Maybe book a bit of profit here. If not already long, we need a little bit of pullback. I'm not sure we're going to come down to these levels, but if we do, it's about a 50% correction of this move. But maybe we can do something like that. I still think we're going to go upwards. So there are many options here. If you did buy here, you're probably holding on to a decent profit now. Nothing wrong with booking a better profit there, maybe 50% or something like that. And then we'll see if we can go upwards. If you're not long, I think you need to pull back. That level is 12,866. Dow Jones. All right, so this, I was actually bearish at Dow Jones. Not that I wanted to trade it myself or shorted it myself, as I mentioned in the market updates, but it was short-term bearish. Now the market is short-term bullish. That's the way I operate. I go with the trend until proven otherwise. Now the price is on the wrong side, and that means I need to do this. All right. So now the trend is bullish. The question is, do I want to be a buyer here? No. I think it makes more sense to buy on a dip. If we're lucky, the Americans are going to see this in the morning and they're going to say, why are we this at these levels? And then they're going to sell a bit. But most likely, after that initial dip, we'll probably go upwards. And I think we can continue to trade upwards here. Let me see if I can highlight this. Maybe something like that. Okay. Let's take a look now at the NASDAQ 100. So the idea with the NASDAQ 100 was, we had several ideas. One was buy on the break here on August 17th. The other one was to buy a pullback here. This one is working out really good. And we're now about to reach the target we discussed when we had a breach here on August 4th. On August 4th, I said the break here can take you upwards because you're dealing with a double top. We're very close to that level. If you've been holding on to this one, very good. I think we can probably reduce the stop loss here. And this is an opportunity to get out with about some 75% of that position. And that's it really. I would look to get out of here. It's doing really good. It's about to reach that take profit level. The index itself, I think, is up with about 75% from its low. Now, if you're new to the market or if you have been trading for a long time, remember this. It's really difficult to make money on down moves. At 70% of the time, stock markets will close positive for the year. And this is for over 120 years. Remember that, 70% of the time. So every time I see the markets being down a lot, I think, all right, is this reasonable? Are we going to survive it? Most of the time, we're going to survive it. That's just the way we are as humans. And as I said a couple of months ago, we are humans. A virus can definitely give us a lot of trouble. But come on, us humans, you can't compare a virus to humans. We're always going to find a way of surviving. And that's why I was really bullish on all stock market indices when we were bottoming out. As well, of course, if you studied what happened in China and the situation there, you have like a blueprint to what was going to happen in the rest of the world. But again, as with financial markets investing, if you read up a lot, study a lot, prepare yourself, do your homework effectively, and stay away a little bit from Twitter and stuff like that, and just look at the data and not how much someone gets a like or not, you can create wonders in your trading, in your personal finance. And that's why I was ultra bullish on these markets. Now, let's go back a bit. Let's take a look a little bit at the data for this week. And we don't really have like super interesting amount of data this week. You can see here that Monday is going to be a bit quiet, and there's actually absolutely nothing on Monday. On Tuesday, you got German IFO numbers. They are indicated as highly correlated to the German economy, and this is quite interesting. So this is the current assessment. This is what people think the German economy is right now. And you can see here that just before the situation with COVID-19, we're around 100. Since then, the index slid with about 80%, and it hasn't really recuperated. That's a trade idea. Some people are saying, look, we are now where we are. We are now where the German DAX is up, like S&P, NASDAQ, everything is up, but the economy hasn't recuperated. And that's an interesting and valid case to some extent. But the thing is the markets are forward-looking. You learn that at university. You can learn that online nowadays. You don't have to pay for it. But this is the expectations index of the IFO. And you can see in Germany, these professionals that make up the IFO, the survey, they believe we're going to go back above the levels we saw. So that's why everybody's bullish, because the expectations is that we're going to go higher. Most of the data, this is backwards looking. You remember when the stock markets were coming down and down and down a lot, people said, oh, what's happening? Why are we going down? And for many days, the market just slid and slid and slid. And then it was like, no one could explain it. No one knew exactly why we were coming down. But it's because the market, the economy tanked. Like in the UK, we lost 20% of our economy, to give you an idea. And this indicator as well is suggesting that 20% of German economy dropped. I don't remember how much the GDP numbers were in Germany, but I think it was like 10%. So this is obviously overstating, exaggerating a bit. And yeah, of course, if we don't come back to normality, if we don't get these vaccines, so there's talks about vaccines, and I think the US is looking to make a deal with AstraZeneca and Oxford University about this trial, getting access to that vaccine. And like even in like you can read in like places like Sweden and stuff like that, they think they can have the vaccine ready by January. And if that's the case, we'll probably recuperate everything, because everybody's just going to go back to work. Everybody's going to go back to consuming. And that is the idea that we've been working with over the last couple of months. However, if there's failure with the vaccine, we can't get things going. And over the next 6 months, people start to lose all their jobs, house prices go down and everything like that, then we're in serious trouble. But we're not there just yet. Take a look at this. This is the US house prices, anticipated to gain with 4% year on year. And the reading and for the prior month, which was May, showed that the US house market increased with 3.7%. So house prices are for now okay in the US. This number is going to be out later this week. And then you have in the UK as well, you have house data coming out later this week as well. You want to pay attention to that. Now the big events are really on Thursday. You had the Jackson Hole Symposium. On the Jackson Hole Symposium, you're going to have several speakers. So it's a 2-day event. And during these 2-day events, you tend to have at least the Federal Reserve making large changes to their monetary policy. So the head of the Federal Reserve is going to speak, Mr. Jerome Powell, and then you have the head of Bank of England, Andrew Bailey, and you have the ECB chief economist, Philip Lane. Now, what do you want to keep an eye on here? Well, are they going to target like unemployment rate or inflation rates? Will they say, well, until inflation is at this level or the unemployment rate is dropped to this level, we will not make any changes on interest rates, no changes on our QE. That will be a strong signal, and that could easily weaken the dollar quite a bit. The idea is to try to support the economy, which I'm sure they will support the economy. But if they're going to target inflation, I'm not really sure about that. If you look at Japan, they tried to target inflation for many years, never really worked out. So that's what you want to keep an eye on. You have Andrew Bailey as well. They're going to cut interest rates to negative in the UK. With Brexit coming up, there's a lot of people that think that that may happen. They have not closed the door on that. And if people start to price in negative interest rates in the UK, that could also cause the pound to weaken, and it's going to hurt the banks of the UK. For the ECB, we don't have the head of the ECB, Lagarde, but we do have the chief economist, Philip Lane. Philip Lane used to be the central bank governor of Ireland for many years, and they're looking to see if they're going to increase the emergency bond buying in the UK in the EU. Okay, good. I'm just going to see if there's any quick questions on the YouTube channel. If you are watching this live, don't forget to hit that like button. Don't forget to leave a comment, just like a simple thank you or this is great or whatever you want to do, because that's important. But the likes is also super important. So we have Stefan and we have Antonio here in the chat box. Question from Stefan. Do you know why Tesla keeps on pumping so much on nothing fundamental? Is it just infinite short squeeze? I think it's a bit like your Bitcoin, right? So it's a bit like Bitcoin where people just get super excited and it's a bit like, I think it's just like that. People think that they're going to revolutionize the world. We're all just going to use electric cars, which we probably will do at one point. Let me see here. And that's why people are getting super excited. But I think the number one thing here is that people are just seeing this go upwards. And this year is the year of the trends. Like, this is the year where you have massive trends, and trend following strategies are making exceptionally good, and people just buy and buy, and that's what I've been doing. I don't buy Tesla though. It's not that I don't buy Tesla, it's just that I don't usually trade shares. But I trade gold, I trade silver, you can trade stock indices. There's so much stuff. So that's the thing now. It will probably come back down to normality, no question about that. As well, you see what happens here, it's a very typical situation for the market. You had in Tesla, like from 2013 all the way up until 2019. So you got about 7 years that this company has developed, and that has not really mattered too much for the stock, right? So for example, here in September 2019, we're pretty much at the same level as 2014. And the markets go through these massive consolidation phases, and then it gets this massive move. And sometimes when it happens like this, it just keeps on going. And this is something I did, something I studied already at university many years, and that's what made me a trend follower. And this is that you can show that the markets are either going to be stuck in this situation, or they are stuck in super strong trends. They may either be bullish or either be bearish. And they're either stuck in one state or the other state. Tesla's stuck in this other state. At one point though, people will come to the realization that it doesn't make too much sense, and you'll have a massive move. But right now it's a bubble, most likely. And unless the company proves everybody else wrong by delivering more calls, providing more solutions to people, then this will come down. The same way as Bitcoin came down. The same way as gold came down. Like gold, from the year 2000, from the year 1999 all the way up, it rallied massively. And it was a similar situation like Tesla now, and ultimately went down with 45%. The same thing happened with Bitcoin. So that's what I would say. Okay, so you got a comment here by Leading Edge Lithium Australia. Yeah, I'm not really sure exactly what this question is. Alright guys, we're going to wrap things up. Don't forget to hit that like button, and don't forget to comment and share. If you're on any forum or your Twitter, don't forget to share the video. That would be amazing. Alright guys, have a great day, and I'll see you guys on Thursday for the next market update. Thank you, and bye-bye.